The South African Reserve Bank's Monetary Policy Committee has been meeting this week to vote on its stance on interest rates after deciding to hold the rate hikes at the last MPC. Economists are optimistic we may once again see another hold while risks remain. Business reporter Ntokozo Khumalo is at the Central Bank's Irene offices in Centurion and joins us now. Ntokozo, what are the risks and how do they play into SARB's next move?
Good afternoon, Hugo. Well, most South Africans would definitely be hoping for the SARB to once again hold on interest rate hikes. And with South Africa's economy alone being in a polycrisis with one issue after the other, including issues of load shedding, including those bottlenecks still in the logistics sector, just some of the risks that in the domestic market are still there, but also international issues around the oil price, as well as what's going on in the United States with the inflation there, as well as China's economy being some of those global risks then to the move that the central bank can make. And as you rightfully said, expectations are that the Reserve Bank will hold. Now, earlier today, I did speak to Netbank's chief economist, Nikki Weimer, and spoke to her about, whether South African businesses and indeed households still have any more resilience left when it comes to those interest rates hikes that we have been experiencing before that pause in the last MPC. And let's take a listen at what she had to say when it comes to the resilience and what's likely to still take place in the market when it comes to those risks that are there.
So in this difficult environment, the fact that we're still growing, you look at the latest GDP numbers, which was for the second quarter, we were still growing by 0.6%. So we have been resilient, dealing with very difficult circumstances, some unique to South Africa, some really just reflecting the general global malaise. But the reality is, at some point or the other, the pressure becomes too much. It intensifies, and especially interest rates. We've had a very sharp increase in interest rates. Interest rates, even by the Reserve Bank's own admission, is now in restrictive territory. And what we're seeing is that the pressure on household income is intensifying. As you pay more for your debt, because of higher interest rates, so you pay more on your existing debt. Acquiring new credit is more expensive, so that might put you off. And as it eats up more of your disposable income, you've got less income available for discretionary spending. And that tends to mean slower growth. So I think we are in a situation where, yes, we're resilient, but we're being tested, and ultimately we will see a slowdown in economic activity.
So, Nikki, there really, Hugo, just highlighting that both inflation and the rising interest rates have been eating away at households and businesses' income. And, of course, over the last couple of weeks, I have been speaking to those businesses that have been sharing their experiences. But she does expect a turnaround in the near future, perhaps not as quickly as most South Africans would hope for that turnaround in interest rates to happen, to start seeing the SARB actually decreasing interest rates. Let's take a look at what Netbank forecasts when it comes to when we could start seeing the central bank starting to decrease interest rates.
I think looking beyond that, there are some positives. What's the sort of green shoots? The green shoots is that the Reserve Bank really have built their integrity. They have succeeded in bringing inflation down back to close to that 4.5% level. Even with rising oil prices, we are seeing that inflation remains fairly steady. The increase wasn't dramatic so far yet. And as inflation comes down, with everybody having received higher wages, you should see a situation where real income starts to improve. That will sort of set the scene for recovery somewhere down the line. And then, of course, once inflation comes down on a more sustainable basis to around that 4.5% level, I think the Reserve Bank will start to ease interest rates. It's not going to be this year, given all the risk out there. But we do believe that that will be next year. They will start to cut interest rates, and as they do that, they'll set the scene for some relief for not just consumers but businesses as well.
So, Hugo, in the next hour or so, we will be moving from lockup up to the room where, of course, the Deputy Governors and Reserve Bank Governor Lesetja Kganyago will then give that decision after they've held their MPC meeting in this week. And we will give an update in about an hour and a half of what interest rates are then looking like after they've made that announcement. It's back to you in studio, Hugo.
Ntokozo, Khumalo, we're holding out Brits until 3 p.m. Appreciate your time this afternoon.